The proxy battle between biotech firm Illumina and billionaire activist investor Carl Ichan is heating up after Illumina's board claimed that Ichan's involvement could be damaging to the company. Ichan looking to add 3 nominees to Illumina's board after voicing criticisms around the acquisition on cancer detection test company GRAIL. For more on the proxy fight heating up between Illumina and Carl Ichan, we welcome in RBC Capital Markets equity research analyst Conor McNamara, joined by Yahoo Finance's Anjalee Khemlani. All right, Conor, here, aside from having as many Illumina mentions in our intro as possible, perhaps you can walk us through exactly what Ichan is looking to get out of this bid and what Illumina is doing to push back even further.
Great. Thanks for the introduction and thanks for the time. I appreciate it. So, Ichan is looking to get 3 board seats on Illumina's board. And I think ultimately what he wants to do is make sure that Illumina divests GRAIL, which is a company they tried to acquire, which was one of their customers. And it's facing FTC issues, and it's been a distraction for the company. So I think some of his concerns are shared by many shareholders that GRAIL has been a distraction. So that's his ultimate goal, and obviously there's been some back and forth over the last several weeks between Ichan and Illumina.
Conor, Anjalee here. What's the outlook for Illumina long-term, considering this also faces a lot of pressure in Europe, and it seems that that's where Carl Ichan seems to be focused on this general idea that the company is willing to battle with regulators rather than work with them. What do we think about the prospect of this company looking forward?
Great question, and I think that's one of the distractions that this is causing. Illumina is in the midst of one of potentially their most important product launches ever, something called the NovaSeq X. And it's the least expensive sequencing technology ever released. It has a lot of product updates from their last NovaSeq launch, which was in 2017. And this product, it's our view, is going to lead to a series of revenue beats, earnings beats, and revenue acceleration, which because of this distraction that Ichan's causing, people aren't really focused on that. So we think the overall outlook for the company is fantastic. The sequencing market is still in its infancy. And as we get to this next wave of biopharma investments in things like cell and gene therapy, mRNA technology, CRISPR, sequencing is going to play a very important role in all of that. And Illumina has built this fantastic moat in the sequencing market. And so, those are all good things for the stock, and it's all being, ignored because of this Ichan distraction. So I think ultimately, we're bullish on the stock. We think this product launch is going to go great, and we think fundamentals are finally going to matter. And that's why, that's part of our view on the stock and why we're outperformed.
And so that's, of course, if this all pans out and plays out by the annual shareholder meeting later this year. So looking at, who they're up against, Carl Ichan, well-known activist investor, one of the OGs, if you will, and does like to pick a battle. So what do you think the prospects are here on some sort of agreement or some sort of middle ground being reached where, the board does shift more in his favor?
It's hard to say exactly how this is going to turn out. I think, had Illumina just given him 3 board seats, I believe that would have been a mistake. I think, to have someone that is in there that is focused purely on maximizing shareholder value, which it appears Ichan wants to do, isn't necessarily a bad thing, because the stock has underperformed since attempting to make the GRAIL acquisition. So I don't think ultimately that Ichan and Illumina will end up seeing eye to eye on a few things. I think that Ichan's going about it in a slightly more aggressive way than I would think is necessarily the best thing for shareholders. But at the end of the day, if Illumina can divest GRAIL and focus on fundamentals again, I think both Ichan and Illumina shareholders win.
And Conor, let me just ask you, this from your bigger picture term perspective, Carl Ichan, as you've described, just kind of trying to maximize shareholder value, but not necessarily understanding the business fundamentals. How common is this in the biotech world, trying to get activist investors on the board without really quite understanding the business functioning, the heart and soul of the business?
Great question. I think that it happens more than we would really imagine. And so, in some of the interviews that Ichan has made, and in what Illumina has written about their conversations with him, it's apparent that Ichan doesn't fully understand the growth projections for the company. I don't know if the timing was specific, that he did this right before this product launch, or if it was just it happened to be when the financial screens came up for him, and he said now's a good time to step in. But I think that's the primary reason that Illumina can't give up 3 board seats, because this is a long-term growth company in a market that they dominate and that isn't fully understood by all investors. So to give up a third-year board to folks that don't necessarily understand the business or the market, or necessarily even what the company fully does, I think that'd be a mistake. So maybe having 1 board seat isn't a bad thing, but 3 board seats for folks that don't know the business isn't a great thing.
To Jared's point, the biotech in general suffers from that. There's a lot of nuance in it. This market in particular, DNA sequencing, said to be about $40 billion by 2030. So that's a really strong projection and outlook. How does this affect Illumina's potential in the future to do more M&A activity, depending on how this all falls out?
Well, also a good question, because this, they tried to buy another company that does compete in a similar space that makes something called long read technology, whereas Illumina makes boxes that focus on short read technology. That deal was also blocked by the FTC. So now they're trying to buy what is basically a customer of theirs. So they tried to buy a competitor, tried to buy a customer. It looks like neither of those are going to work. So future M&A, that's what other areas can they get into? Probably not going to be one of those 2 areas, but there are some other opportunities. More importantly, they just need to focus right now on executing on the product launch and, get back to revenue and earnings growth. And at that point, I think we could start taking a look at what else is a potential acquisition target for them.
All right. Sounds like we got to get back to fundamentals here. Thank you, Conor McNamara, as well as Anjalee Khemlani here.